Tax season is finally here, and we are here to answer your questions. We're here to give you some insights on what to take a look at. So, Alex, welcome to the platform.
Appreciate you.
Glad to have you.
Glad to be here. About time. We've been talking about this for a long time. You don't know what goes on behind the scenes, but
Long overdue for sure. And so, glad to have you here. I think there's some new developments, especially in the world of crypto and talking about crypto taxes. So I think we have a lot in store for you all, just to talk about in terms of taxes. So we'll get started and go ahead and jump right into it. So tax season officially started January 29th. All companies were actually required to have out W-2s as well as all 1099s were due by the 31st of January. So when it comes to taxes and even things in the crypto world, this is something that's totally new for me. And it may be something that's new for a lot of our viewers out there. So share with us just some of the, key things that pertaining to crypto and taxation that they may need to be aware of for our crypto investors.
got you. So for everybody that's out there, if you're not familiar with crypto, it's all the crazy thing. You might have heard it called Bitcoin. So Bitcoin is just one of the cryptocurrencies which you can invest in. And you're going to hear a lot about crypto and other cryptocurrencies this year and in the following year. So it's very heavy in the news. But as far as taxation goes, I'm going to cover a little bit of what to expect with crypto and how taxation differs or how it's similar to investing in stocks. So good news, if you are investing in crypto, it is actually taxed the exact same way as you would be if you were to invest in stocks. Now, what I mean by that is, if you have short-term investments, like in capital gains, a bit depending on your tax bracket, it is taxed from 0 to 27%, depending on your tax bracket, the same as it would be if you were to sell an asset less than a year, or if you were to hold that asset over a year, then it will be taxed from 10 to 37%, depending on your tax bracket. And that's exactly the same as if you were to sell stocks.
Gotcha. So that's nice to know, especially a lot of folks, including myself, that invest in the stock market, that invest, and have those short-term as well as long-term capital gains, that crypto is not being taxed in a different way, but taxed in the same way you're selling two stocks. So I guess one of the main questions for a lot of folks is, are there different filing forms or, or are there changes or any new regulations to how they will file these short-term gains and or losses and also long-term gains or losses?
Yeah, so the way that they calculate how your crypto is taxed, they'll take the amount that you purchased that purchase price, and they'll subtract that by the gains that you have over the time of the sale, and that's how they calculate what to tax you on.
Gotcha.
So it depends on that does include if you're going to transfer from one crypto to another, such as Bitcoin to Dogecoin, as a lot of people like to switch over to, or vice versa, or if you were to straight up sell Bitcoin, then same concept. Then they would charge you based off the gain or the loss of that trade. Okay, what they won't charge you on is if you send it to another wallet. Okay, so the way that the way that they could get it regulated in the first place is they got to be able to kind of corner the market on when the crypto enters into having dollar holdings, and when it exits having dollar holdings. And in order to do that, you have to go through a brokerage which is registered in the United States if you are a United States citizen, and those brokerages keep records of that. And so you can't just pull money out of nowhere. They got to know where it's come from, where it's going, and make sure it doesn't hit any sanction rules. Yeah.
Nice. So crypto actually enter in circulation or dollar holdings, as you said, and also crypto exiting circulation or exiting from the trading market back into dollar holdings will be the time frame in which they look at. Very nice. So, tax season in general, it's an exciting time. People are getting refunds.
Mhm.
I mean, it's a lot of people getting a lot of money.
It's a wonderful time of the year. This is my Christmas. I'm sorry. Like, I'm excited because this is what I get my refund. Like, I'm excited for this time of year. The family got their Christmas.
Yeah.
Now January, top up. It's time for me to get my money.
It's Christmas time all over again. So, the thing that I like about it is the fact that it is an exciting time. A lot of people are getting refunds, various amounts from small up to large. But one of the things that I don't like, I don't like the refunds. And I'll tell you why. A refund means that the IRS took too much withholding from you. Check this out. They took it, they held it all year, and they're not paying you any interest on it.
That's what I was about to say. It's interest-free loan for them. It's crazy. They get away with interest-free loan because I can't get away with it.
So you held my money.
Yeah.
And
you don't pay me for it.
You don't pay me for it.
And you give it back, and I'm surprised at the end of the year.
And you give it back, and I don't get anything else.
Right. And I go buy some rims with it.
I don't get a car wash. I don't get a gift certificate. I don't get a gift card. I don't get anything. So it's very exciting for those who are getting a refund, but quite naturally, this is considered an interest-free loan. And so why I want to highlight this point, very, very important, y'all. I want y'all to pay attention to this. You need to look at it right now. Look at your payroll and look at how you can make adjustments to your withholdings so that less is actually withheld, which comes back into your pocket, whether that's weekly, bi-weekly, monthly, however you receive your salary. Ensure that those withholdings give that money back to you throughout the year so that at the end of the year, you're not leaving a large amount of money that's with the IRS for them to sit on, not pay you any interest, and then ultimately just give you your money back. So I definitely had to say that, but the rest of the news I think is pretty good.
So what are some simple adjustments that I could look at to make sure they don't take more money from you next year?
Very good. So I'll say the first two things is this. One, you want to go and look at your withholdings. Mm-hmm. So regardless of whatever your status is, whether it's single, whether it's married, with dependents, you want to look at maximizing your withholding. So for example, if you are, a family guy, you have a few dependents, you want to make sure that those withholdings are adjusted to where you're paying right the least amount of tax that legally you can pay without paying in more for the fear of, or at the end of the year, I'm going to be short. Pay less up front. That way it puts more money in your pocket. The second tip I'll give you is make sure that you're able to take advantage of reducing your taxable income. And that's taking advantage of 401k plans, any profit sharing plans that the company may offer in retirement plans that can reduce your overall tax liability, which would in turn end up reducing the overall taxes that you'd be liable for. So those are two key things I always advise to make sure that folks take advantage of. And it's going to be different. There's not a one size fits all. It's different for each and every individual, but you should definitely start looking at your payroll. And so there's a couple of things that you just brought to mind that I want to bring up. A lot of you all who are out there that are going to be receiving refunds, it's very important to make sure that you electronically file your return. Whether you do it as a self-preparer or whether you have a tax professional, you file electronically. Why? Because that reduces the amount of time. So you're looking at 21 days, you're looking at 3 weeks on average, unless there is some, some delay. And I'll talk a little bit about what could delay your refund. But in most cases, you'll receive your refund within 21 days on an electronic file. Now, there are some folks like me who are still old school. That's it. You got it right. So if you want to do a paper return and you want to file it and mail that in, then you're going to be looking at 4 to 6 weeks on that. So two distinct time differences based on filing electronically. That's 3 weeks. Paper copy that you mail in, you're looking at 4 to 6 weeks. Now, there could be something that actually delays your refund. The most common thing that delays a refund is if there's an error on the tax file. And so this error can be on a number of things. There's incorrect information provided. There's incorrect deductions that are there, either incorrect credits that may be there. So there's a number of things that can cause an error. Or you may be one of those individuals that new task force of 5,000 new IRS agents are going to be looking at.
Mm-hmm.
So you could be in that higher net worth category, whereas there's a new task force of IRS agents that are hired to go after a specific group of folks. And so your return could actually trigger an additional review.
Speaking on that, I'll let you guys know right now, if you took a PPP loan back when they was handing those out and you did something with it that you weren't supposed to, you need to get a lawyer, because that's one thing they're going to come after first.
Those PPP loans, I think there are a lot of folks who are having some challenges with those. I do understand that there's a lot of collection efforts in general that's going on. So I think that's sound advice for them to get legal guidance and legal direction regarding anyone that did receive a PPP loan and those funds. So no, that's very good. Now let's kind of switch gears a little bit, and let me ask you about this. You know the days of getting a tax return. Yeah, I mean, you've already said this is your Christmas. What are some of the things that you typically do? How do you typically spend your refund?
It gets invested. If you count spending as investing, it's 100% and reinvest it. Yeah. I would do 10% crypto, 30% in stocks, and the rest I would find some real estate or into my business. That's what I would do.
Gotcha. Now you know me in real estate. We have a very, very nice two-step going. We got a real nice two-step going. Real estate, W-2 income, investments in stock, and investments in business. We've had a really, really great relationship probably over the last 2 decades. So when you talk about real estate, that's something that goes very well with taxes. I mean, it helps offset a lot of taxes. But staying on key with tax refunds, I think a lot of times that refund is perceived as additional money when it's really your money.
Right. Do not take your tax refund and buy some liabilities with it. Something that's not going to make any additional income and take it, put it somewhere where it's going to make some money. So that's people's biggest mistake, is taking that refund, taking this additional money, and just blowing it. And now you don't have anything to show for it, and you're gonna be living paycheck to paycheck the very next week. Like, Do something good with your money. And I guarantee that's why a lot of y'all are here to know where to put your money, especially these tax refunds come.
That's what, see, as a perfect segue. What we're doing here is not only talking about taxes, we're not only answering your questions, and our team, by the way, uh, is open to receiving any questions. That's why we're here. We're here for a Q&A. We're giving you all some general information on some of the specifics of tax season, but we're here to answer your questions to make sure you get sound advice, you get practical insight on what works. Not what works because we're telling you it works, but because we've tried. We've already put this in practice and received the results and the benefits of what works. So if you have any questions, we're open to taking some questions while we're here doing this live. So there's a couple of things when it comes to the refund that I think is very important. I always recommend people to invest it back into themselves. And there's two things I always recommend people to do. Number one, I want you to set up an emergency fund. You gotta set up an emergency fund because the fact is we all have emergencies in life. Our emergencies may vary, but we all have an emergency in life. And so setting up an emergency fund is very, very important. So putting that money in a high savings yield account, right now you probably can get anywhere from 4 to 5% at a high yield savings. So putting that there for a rainy day, you can never go wrong with doing that.
I'll tell you what, for if you look at banks right now, banks, credit unions, they're not offering very much. Majority of banks, they're not offering very much as far as return, as far as your interest rate that you're going to get back for keeping your money in there. There are some institutions, as Freddie said, high yield savings account. But the two that I use, if you have a brokerage account for Robinhood is offering 5.25% back on your money if you just put it in the brokerage account, and Coinbase is at 5.20%, and just keeping that money on the app, you're gonna get money back just for that. So instead of keeping your money in the bank, keep it in the brokerage account or keep it in the crypto exchange, and you can get much more money back that way. And it stays liquid. So if you see a good investment, you want to drop it on there, you just move right over. The only that bad side about it, I don't even say bad side, but one thing you got to keep in mind is you do get taxed on interest income, which is 3%.
That's true. So very important. You will receive a 1099 for interest income. But quite naturally, if you are truly establishing a savings, then that interest income, I think, is worth it, especially in the form of an emergency fund. The second tip I want to drop on y'all real quick is I always encourage people to take a very small portion, and this is anywhere from 10 to 15% of whatever that refund, that tax refund amount is, and invest that back into their financial literacy and education. Develop your financial literacy. I mean, you can never go wrong with improving what you know about money, improving your money management, improving your debt reduction, and just learning the business of you and your money. That's huge.
100%. I spent $15 on a book called The Last Investment Guide You'll Ever Need by Andrew Tobias. That book alone, made me hundreds of thousands. One book. After that was Rich Dad Poor Dad.
Yeah.
The plenty of books after that, so definitely invest in yourself, invest in your wealth of knowledge. What you're doing right now, as far as coming on platforms and learning about financial knowledge, is exactly what you need to do. It's zero output. It doesn't cost you anybody to do this. Just literally your time. But the amount of wealth knowledge that you learn here, priceless.
For that, I want to go ahead and drop this. Tune in and make sure you all look out. We're going to be premiering Tax Talk. I mean, taxes I don't know if a lot of people really grasp this, but taxes is going to be your largest, most single significant expense over your lifetime. And so understanding that, you really need to have a good grasp of taxes and also how to reduce tax liability. And also when it comes to tax planning, tax preparation, you got to have right folks on your team.
Me and taxes have a hate relationship. I do not like taxes. Listen, this country was built on taxation without representation, and I think that we just go ahead. There's no reason why I should get an income tax, and then I'll take that money and go to the gas station or buy my car and get taxed when I buy my car, and then I go to the gas station and put money in there. There's gas tax on that, and I go buy some stuff at the store and there's tax on that, and then you have inflation tax, which is a visible tax. They're taking away money that doesn't belong to them. Well, why are you about pocket? You're not in my house. Why are you about pocket? Hi. Me and taxes have a hate relationship. I'm telling you, keep taxes out, keep it covered after pocket as much as you can.
Oh, man. Me and taxes, we're on the opposite side. We do a cozy two-step. I mean, we've got a real good relationship, and it hadn't always been that way. I got to be honest with you. I invested so much of my time and knowledge into learning about taxes, into working with the right folks, partnering with the right CPAs. Um, if I'm honest, I've probably been through maybe about 7 CPAs. And I'm not saying that to highlight that. What I'm saying is not all CPAs are created equal. And so you got to find the right partner that works with you. We're not looking for anybody to work for you. We're looking for people to work with you and work within the legal IRS code to ensure that you're getting the maximum benefit and also to be able to guide. So me and taxes, we got a great relationship, and I want to be able to share that. And so that's a part of what we're doing with Tax Talk Live on Saturdays. We're going to be kicking this thing off, talking to you all, answering your questions, giving you sound advice on how to maneuver one of the single most largest expenses that you'll have over your lifetime, and that's income taxes. Let me ask you a question. And I mean, this is not just for you, it's for everybody. Quite naturally, income taxes is going to be number one in terms of the largest single most expense of your lifetime. But also in the tax category, there's a number of taxes that we have to pay as U.S. citizens. What do you think is holding that number two position in terms of taxes that's going to be the highest that you're going to pay over your lifetime? What's holding that number two spot?
Social Security, Medicare.
I wish it was. It's actually property taxes.
I didn't even think about that.
It's property taxes. So you got income taxes, and then second, you have property taxes that you got to pay. And so when you combine those taxes, you gotta get that cozy two-step going. Like you gotta get a good relationship with taxes. It ain't going nowhere. So, we definitely gotta give you all the right information, give you all the right tools to make sure you're getting your questions answered. So, any parting words? I know we wanted to jump on here real quick, but any parting words that you want to share with the viewers?
Hold on to your money. Protect it. Don't let nobody take it from you as far as valuation. Nobody's gonna care about your money more than you.
Absolutely. So with that being said, thank you all for taking a little bit of time out of your day. We really appreciate the support. And the best way that you can support our YouTube channel, our Instagram, our TikTok, our Facebook, is to share these for more awareness. Our passion is truly being able to connect with you all, and be able to give you sound advice when it comes to your money and the business of you. So hopefully you all enjoy the rest of your day, and you all have a good Saturday. And we'll be back to see you all again soon.
Peace.